This is where the world gets a peek at what goes on in here. They are stabilizing, which is good news, inside of a zone that had a support line in it, which is good news. That means everything now is normal. Yesterday, we opened and we super spiked. There's still extra froth from that super spike, but this here gives us half of it. So if you look at yesterday's rally, I am live. Awesome. Welcome, X. Welcome, YouTube. Now sign up. Bye. Go sign up. So we gave up half of it ish, normal price action. Even if we give up 2/3, we'll still be normal. I'll bring you the visual from Thinkorswim. It's just easier to see. So this is the S&P from the last 3 days. So you can see we had an open yesterday, super spike. That's why the bulls were complete control. There was not one red tick. And we just gave up half-ish, low, high, normal. So we have a trend, higher lows, higher highs, and so far, higher lows because we have more lows to the left of this. It's normal. It feels abnormal because we haven't had any red days, many red days. So just know the range we're in so that you'd know what to do with your risk. We already talked about it. Okay. Iron Condor from this morning. The credit put spread is under pressure. The delta is 4, so 0.4. This early in the day, I wouldn't panic out of it. Although the whole loss, if you took it now, it'd be $60, not the end of the world. Within the next 2 hours, you can decide to keep it because it will get cheaper if we don't fall in your favor. And if need be, you can roll it to tomorrow and deal with it tomorrow, and I'll help you with that. Just don't not tell me about it. Let's trade together. That's why we're here. Okay. The iron butterfly, the iron condor, the special iron condor that I mentioned is not losing any money. The beta version, remember this year we're trying something new. We've never lost in it. Knock on wood. Today, that was a weak version of it. And even that, with this big drop, still not losing money. Because my data said lower is the area of balance. So we collected $200 to sell a call spread and $60 to sell a put spread. So the 200 paid us more than the 60 is losing us now. So that was a good balance. I bet you can book it for a profit if we just bounce a little bit here. I need an entry for an SPX, the green box. You can go long. We're falling into supports from yesterday. There should be a bounce. You should know that this circle and this green box were significant, so they might stall into them. If you look left, that was the low of the overnight as well. So yeah, if you took a long, the runway is not long yet, but look at the SPX. There are willing buyers. Those green bars are support. So I'm going to go and add more legs to see how that looks. Okay, overall the bears are still in control because they want these bars, the red bars. Come on, show up. There we go. So it's just as easy to rally 50 cents, if not a little bit easier, than to fall 50 cents. So owning calls here is okay. You just need to know where to scalp. 694.30 and higher is going to be difficult. If you overcome that, 695.10 or higher is going to be difficult. I would completely exit by 695 for me on the bounce. And that would be trading that green thing even though it got busted. So you need to look at the mega caps and where they stand, really. Is the audio okay on X? The other day, last week, I muted myself by mistake. All this is happening. We're barely red, and mega caps are super red. So we have heavy lead balloons. Alphabet gave back the spike. which is what I thought might need to happen. Qs are down zero point 0.4. The small caps, 2,000 stocks, are not down, and they just broke an all-time high in a big way, much to Corey's chagrin. Um, let us know what you do with those, Corey. Eh? The puts on the XLF are up 70%. In case you came in late, you should scalp them or close them if you have a bearish portfolio. We have a coin flip reaction tomorrow on those. We have two banks, Citigroup and Wells Fargo, three, and Bank of America reporting. So odds are, if they spike, your puts on the XLF are going to go sour. So you might want to scalp some and say, okay, I won and I left runners. The bearish thesis has not played out, right? So you take your wins on the bearish side as they come. That was me scalping. If you're bearish in January, it has not been easy. Something just gave back. Look at United Airlines. Unreal. So I'm short United. Delta Airlines reported this morning and it dipped. Did Delta recover too? The report was fine. Delta recovered. So UAL dipped with Delta. And now it's recovered back to being up. So they're rolling out of Delta into United. I don't know what's going on there. I'm short at 165, the brave Nick that he is. I said, okay, somebody wants share at 165. They paid us $700 to promise to give them a share this year at 165. You got it. I'm yours. So I need to add to that trade. I will do that. I'm going to close some of my losses on silver and put that money into that United Airlines. The GDX, I'm short. I'm not backing down on that one. I'm short stock, which I rarely do. I sold stock. They're red, but all you need is just one day to be right. As long as you have enough money in the account, you're fine. That's the beauty of being traditionally short. You only need to be right once. Bitcoin moving up. Moving up is, let's see where it's moving up. I looked at Bitcoin this morning. I said it needs to break out of a certain level, and I don't remember it. Then it has an opportunity to get to. Okay, so it did cross that mini level. So I said if it takes out this level, and it did, it can get itself to challenge these. So the measured move of this breakout from about 92.3 can put it to challenge these recent failures from earlier in January. And the tag teaming bulls will say, if you take that out, then you can go to break 3 digits again. There is some weird concept today that Bitcoin is going on the gray market for over 100 in Iran. So maybe that is fueling its move here. I don't know. Who knows? The fact that you can price something differently in different countries is pretty weird, right? But that's Bitcoin. So I'm holding my coins and I'm not doing anything with them. Good recovery from the ETFs. The XLI has been insane. Boeing, CAT, war companies have had spikes. I don't know if they held them, like Lockheed, strong, RTX, strong. Is there a war ETF? War. U.S. Global Technology and Aerospace Defense. Look at that. There's an ETF called War. So if you took the Iron Condor this morning, you're losing $20. If you change your mind about it, lighten up your credit put spreads. Your credit call spreads are going to be fine. They're way up there. But if you close the whole thing, you lost maybe $20, maybe. Not a bad loss if you're nervous about the bottom today. So far, the bulls are holding the bottom. Unless these guys decide to lose these two support zones from 2 days ago, these are the seven largest companies on the planet. I don't think that's going to happen easily because of this purple box. On October 10th, the market crashed 4% from high to low within hours. That's the box these guys were in. And those are the best companies. So I don't think they're going to let it go easily. Just like they're not going to cross through it easily, they're going to hold it as support. My goodness, Microsoft has had 2 sigma already. The Microsoft move is straight down, and it cut through what it typically does on a day from open to high, open to low, all the way to the downside, plus a standard deviation. So it's way out there. I don't know what happened with Microsoft. Maybe the news about Google is taken away from Microsoft. But this is what I told you literally yesterday. I told you yesterday, Google is kicking everybody's ass with regards to AI. It's the clear winner, and it's going to obliterate all of its search competition. It's going to dominate the world even more. It already dominates the eyeballs. They have the number one and number two time-consuming watching things. So searches and YouTube beat that. And pretty soon they're going to flip the switch from having regular search to AI search and everything. Whew. Dangerous. Let me tell you the danger about this. I don't think we know how it's going to change the world like the camera changed the world for social media. I think it has that kind of potential, massive potential of game-changing, world-changing events. Because the way search works now, you go to Google, you say, you ask about a camera. What do you think? Tell me more about Lyra. And you'll get search results. 10 on the first page. You scroll down, you click on the first, you read it. You click on the second, you read it. You click on the third, you read it. And then you make up your mind. AI search, you ask it a question, it gives you an answer. Period. It becomes reality. Most people take the answer and run with it. What if the AI has an agenda or is wrong? You adopt the answer that was given to you, as opposed to you forming your opinion. You're using somebody else's opinion or another code's opinion. Huge difference. I bet you it's going to change the world in massive ways. It'll be easier to control opinions. The same reason I told you TikTok will never leave. AI search is going to be amazing. The president of the United States, whoever that is, he, now and in the future, is going to be good friends with alphabet management. Phew. Okay. AI in Google is pretty impressive. It's just messy as hell right now, but it's getting better by the minute. So I think it's worth every penny right now. It's not cheap, but it's worth every penny. I'm interested in seeing if Google stock today can get to 331. 331-ish, 32 to 30. It would be insane, but interesting. I find it funny that they're buying Caterpillar stock to all-time highs and they're spitting Microsoft stock out like it's garbage. I prefer keyword search because I like to form my own opinion, but I definitely love the convenience of asking a question to AI. and then having it give you an answer. But if you're smart enough, you can tell the answer is wrong. Like today, I asked it something about mortgages and banks' net interest margins, net interest income, and it told me a fact that was mathematically incorrect. I said, "You're wrong," and it said, "No, you're wrong." I was like, "No, you're wrong." So the banks got 30%, 33% break on their borrowing costs from the Fed cuts. We got 11%, 12% reduction in mortgage rates in 2 years. 12%, that's it. So they passed along one third of the savings they got. So that's why JP Morgan today reported net interest income record. The Fed is helping the banks more than they're helping the economy, us, the economy. And that was the point I was making. And Grok was telling me, no, you're wrong. I was like, how am I wrong? That's 1 + 1 = 2. You can't say you're wrong. All right, stabilized. Beautiful. Let's see them mount. Taking out 693.8 technically gets you 695.1. Let's make sure that that's correct. Oh, more than that. 695.5. But 694.5 is big. This level, these red candles here matter a little bit more. So that blue zone you see is going to be challenging. It's available. You need smaller red bars up top for me to believe it. Yes. I was. Mathematically, it is correct. Okay. I don't understand that, but I'm not going there. My question was 1.75 divided by 5.25 equals 33%. The other one is 12%. 12% is smaller than 33%. You don't want to make a lower low because you will go to 691 or 690.6. On the SPY. These are short-term comments. So far, so good. Where we went to is still okay. Get back to the top of this yellow, tiny hand-drawn box from yesterday. That would be progress because you would have held the support and created a point B. I know it's not a perfect harmonic, but that could become one. So you had a dip, a bounce, and a smaller dip and a bigger bounce. It's still in the progress. We don't know if they're going to get there. So the shape would be, harmonics come in M's and W's. So it would be the spirit of a W forming, right? So you want to overcome this yellow box that was significant yesterday. I don't understand that logic, but I'm going to leave it right here. I'm just never going to address that. It's a touchy point for some reason, and moving on. $692.85 should hold. If not, then that letter X may fail. Now we're splitting hairs. $694.1 or 2 should be difficult to overcome if we get there. So if you're holding calls, use any bounces to fix your calls if you're underwater. If you're holding calls and they're working, put a tight stop on them. You don't want them to go red, because if they go red, that means we're going lower. You can exit and rebuy lower at the risk of missing out. This will be a good path for active traders. Now, slower traders, let me know what you need. Are you AVGO is bucking the trend? Side comment. It was strong yesterday too. Are you catching the falling knife in JP Morgan? If you need help, let me know. The KRE is kind of confused, doesn't know what it wants to do, so it's in the middle of the range. Bros, BROS, popped on my alerts today. I didn't check it out. If there's something there, let me know. It's a good P&L. I don't think it has a good trend, but my BA trade. When does yours expire, Mike? I don't want to assume that I know what your trade is. Not this mic, the other mic. I don't disagree with that, but at all points, even when it's 1 + 1, at what point do we say, okay, 1 + 1 should be 1 regardless of what AI says? This is literally that case. This instance here is literally that case. I agree with your point, but what about 1 + 1? Three, two, Mike, January 30th. Okay, so if it's January 30th, I'm not rolling it today. No. I don't have any information that I can use in order to make my position better. It's underwater. I'll deal with it. Luckily, it's a credit call spread, so the maximum damage was by design acceptable. The one thing you want to pay attention to, and you can help me with that, find out if there's a dividend in between us and them. So if there's an ex-dividend day between now and the 30th, we'd have to deal with it. So if you keep your eye out on that one for me, that'd be amazing. I usually do a good job on looking out for those, but some things slip through the crack. This is good progress on the call side. So not quite a cup and handle, but that's progress. Okay, okay, I'm not saying. So in order for me to help, just let me know the exact situation. In general, maybe a tighter stop would work. So if I take a trade and it goes against me, if I put a stop and I make the stop tight, then I either profit from being right or I lose a little bit. So this is for the person who's asking in private. The next trade that you have that's pressuring you, let me know. I'll help on the fly, live. And stay away from the tickers that are not treating you right. So I know you traded gold the other day. I think it was gold. So if gold is beating you up or you're not getting good results from trading gold, then stay away from gold. Did you hear me? Let me know you heard and you understand. Okay, so it's weird that we're that wrong about it. So that means it's a matter of stops. Okay? Just have be very picky with how quickly you bail on a losing trade. Like today, what did you do today? Like the one, if there was a bad trade today, tell me what it was to see if I can pinpoint the actual reason that happened. If you're comfortable sharing with me in private. In theory is all fine and dandy, but let me know, okay? We're here all day. So look how cool it is that a zone we identified yesterday as pretty important is what's playing out today. This was point D from yesterday. Perfect point D right here. So yeah, they went over and it doesn't qualify as the hunt of point D, but the levels were perfect. So the market is still organized. It's doing its movement. It feels wild, but it's reverting to math, which tells me that the algos are healthy. Okay, so how about this? Go back to using the SPY until you get on a good jag. This way, mistakes are smaller. Baby steps. When if someone is trading the SPX intraday, you buy a call, you buy a put, it's a lot of money. It goes against you for a few minutes, it's hundreds of dollars. Versus with the SPY, to build more confidence, the damage in totality is smaller. So that would make better sense. AVGO doing all it can, but Alphabet doing well too, up 1.5%. But the rest are stinking up the joint. So Boeing might be spiking, but I don't think that that's the reason. We have Caterpillar also spiking. So, but Delta reported earnings and mentioned an order from Boeing. I don't know if that was news for Boeing or not. All right. So there's no way, shape, or form do the bulls want to get back below 693 today. There's no reason, tactical reason for them to get down there, except they left an open candle, kind of, at 692.9. Tiny little sliver. Let's see. Yeah. Oh my gosh. It is splitting hairs. Like, I wouldn't buy a put for it, but the way I would use that information, like if we get there, then they've given it their best. They're trying their hardest. The sellers are right there now, 695. So yeah, 694 to 95, that's a whole SPY dollar, correct. And on the SPX, it says 697 is harder to crack than 6955. Let me go to my spreadsheet. Okay, so let me expand that up. Delete 6920 where everybody piled into puts. So the sweet spot, it's 6965. And 6970 and 6960 are equal. Same for the next $5, 55 and 75. So the sweet spot is working. I bet you our iron condor is green. It is. So the iron condor, the typical one, is green. The weird one is also green, and green a lot more percentage-wise because it only risks $250 to make $250. So it's paying us $40 almost in profits out of $250. So the percentage win is a lot bigger, and the maximum loss is a lot smaller. So if we can perfect that, and we've had 4 out of 4, this is the 5th. That'll be our moneymaker every day based on pure science. Pressure. That's it. Walls. Call walls and put walls. The way I built them in my spreadsheet, it's visually easy to pinpoint where market wants to be with the least amount of pressure. Like water, it wants to go to the easiest path possible, or electricity. So that would be good. And today was challenging. It's not like we opened flat and we stayed flat. We had a pretty active open. Yesterday, we had a pretty... so yesterday's, we couldn't find a range. We found the top. We said there's a wall exactly where we ended up, above where we ended up, 69.80, I think, and we closed like a few dollars lower than that. So we saw the wall, but I didn't see a put wall. So I said it's probably okay to sell a call spread for $100. It paid, but it was challenging on the emotions if you bailed on it. So that's an advantage. So keep that in mind. Some passive income other than a typical iron condor. It is an iron condor, but it only risks $250 to pay $250. So those are coin flip outcomes with way better than coin flip odds. I'm excited about that for 2026. So stick around. I will share my findings with you. Okay, call walls in the options chain look like they're at 69.80 starting and higher. Put walls is at 69.40 or lower. So 80 to 40. So if I was selling a strangle, I'd be okay doing it there. Don't sell strangles. But if I were, that's where I would do it. I don't think you can monetize that statement. 69.80 probably doesn't pay anything right now. It pays. Who's brave? If you just came in and you want to trade, 80 pays $100. 69.80 pays $90 in credit. 69.40. Do I see 40? Let me verify. Yeah. 69.80 and 69.40 is a really aggressive iron condor if you just came in. It pays $140, maybe 150. So you're risking 350, a huge return, which means not easy. They don't give out free money on Wall Street. When they promise a huge return, 150 divided by 350 is a huge return. It's not going to be easy. So you can make it easier to go to like 69.90. No, you can't. No, 69.80. So you collect 0.9 on the top, 0.6 on the bottom. So that's 1.5 minus $5, the maximum width of either of the sides. That's 350 in risk. In about an hour or two, you can decide, you know what, I don't like it. You can close it for partial gains or partial losses. If you're under PDT rules, don't do that because you're going to need to actively manage this one. Okay, trade was 11 shorty at 829, got out at 832. What part of the world are you in? Like, what time is it for you now? I don't use automatic stops, so I'm probably not the right guy for that to help you. Doug, 1 second. Is it okay to place a debit put thread on data dog? Debit put, you want to short it? Whoops. What time frame are you in? The person I'm talking to in private. I wouldn't want to short a stock that's fallen so much already, but if it's a credit put spread, yes. But make sure there's no earnings coming so you don't get stuck in that. What time frame are you in? Whoops. I don't know if you heard me, Tom. Earlier you said you were shorting the market. Sorry, you were going long the market and you were going to sell some calls. I said sell twice as many calls as you said, or sell them for today and tomorrow, or tomorrow and the day after. Because I saw, okay, good. So you took precautions against your long. So I wasn't telling him to short the market. He bought ES. So he would be hedging his bet. Okay, good. You're in good shape. What time? What is your time zone? You gave me times of entries and exits. I don't know where you're at. Like for me, it's still not yet 8:30, so you're clearly not in California time. So the target on this bounce was for me on the who is this IWM? Somebody was asking. They came within pennies of that target. So if I was long the IWM, I would have exited. On the S&P, I already said I would exit. Earlier, I said I was exit if they approached 95. Well, that bounce didn't last. That was this bounce here. Here, they're making progress. They're holding these blue lines. They're fighting for the yellow box. All of these make sense. They're stuck below this bar. If you were here yesterday, this was concrete floor. because of several candles that played out. We drew it, we colored it solid green because it was concrete floor. And then the trade happened during the day, and then we had a couple of weird candles on top, and we said that's a concrete ceiling. So the overnight spike on emotions broke through the ceiling, but now they're back below both. So the bulls want to get back in between them at least. But what was a concrete floor is presenting some difficulties here, which also makes sense. So all of this makes sense. So now the question is, will there be somebody that steps up to the plate? How about Microsoft not sucking as much wind as it has been? As long as nobody else. Meta, nope, not Meta. Meta is straight down. 1 hour, okay. Okay, doke. So let me read your comments. So you entered here. And you exited here. What was the trade? Was it puts or calls? That seems weird. Okay, so I didn't say short down here. I don't know why you entered. Somebody said, "Can I buy some calls?" I said, "All from here to here." I said, "You can buy calls, but exit as they spike." I said the SPX, if it doesn't make a higher high today, might end up at 6,900, which is now 6,893. And I said that there's a lot of support in between, but there's a measured move that points to that if allowed to go there. So I don't know exactly why a put entry was deployed here. So I like the fact that you didn't let it get away too far, but the SPX does punish quickly with dollars. So $300 loss from here to here makes sense. But I'm questioning the entry point. So next time, give me a heads up on your entry idea, just so I can tell. That is something I would take. There's a little bullish flag right here. If they take it out, they get to 694.50 or 60, which is another challenging level. I'll put a line for you. This should be a difficult zone. Now, this was target 1 of this green line here, but I don't think so because we went lower than the stop out point by quite a bit. So you should modify that and say this is target 1 zone. But this is a significant level statistically. So the machines are going to look at it and pay attention to it. All right, we're zooming in to see who's providing what. This is now 1 minute on the ETFs collectively. Now, there's no XLK and no SMH here. So if you're tracking something like AMD and Micron, they're not showing up here. AMD is up 6%. Intel is up something big too. So SMH, XLK are not here on purpose. So this is ETFs that are XLF, XLY, XLI, V, C, P, B, and E. So basically the market minus tech. I don't want tech in here because tech is in here. And these are the 7 largest companies. I should add Tesla in here because Tesla now is also significant. And time frames, we're going to make them all 30 seconds to see if we can pull off a swing trade for today. Nothing is easy here. They're fighting for control. So far, we gapped up, we crashed, we held the support from yesterday. All of this is normal. The next level is, will we make a lower low a little further down inside yesterday's range? This dotted blue line that you see on my screen, it's hard to see. I'll outline it for you. This line, this was the opening range of yesterday. This was an hour and a half of battles yesterday at the open before they took off to high heaven. So makes sense that they fell right in the middle of it, and they're trying to rebuild the effort to go higher. What do? We buy dips and we make higher highs. Dip, even though it's not really a dip, but it is a dip. And they're going to try to make a higher high. So who are the soldiers? And will these red bars disappear? Look, it's an equal battle now, if not a little bit bullish. So now it's harder to fall than it is to rally past 93 and through 95. Even here on a 50-cent increment. So we are at 6966, 6965. We're right here. Look how much easier it is to go up 50 cents than down 50 cents. So I wouldn't hold a put here with confidence at all. And if I'm holding a call towards that yellow line, that's the easier path. That's how it stands right here. The iron condor from this morning is pretty green. You collected $110 to open, and it's now only $70 to close. So you're already profiting $40 out of it. I think you can leave it on, short of a disaster headline. Those lines look doable. The beta iron condor, shoot, I overrode it. What was the original number? Did I put a box for it here? Does anybody remember? I don't know how I wrote over it. Was it 69.90 and 69.60? $50. Yeah, okay. I just found it. It's that orange box. Okay, let's see how well it's doing. Whoa, it's doing great. You collected $250. Now it is $135 to close. Book it. You made $110. That's 42% air math reward on your risk. Exit. 5 out of 5. And that was a slow trade. $44. I was off. You mean other than what I just did? Okay, let me roll up my sleeves. The bar is set high, people. Holy moly. No, wait. Is it? Hold on. The calculation. This is J. Yeah, the calculation was correct. I just had the boxes in the wrong spot. Okay. Let me check on the pressure to see if we can identify a call wall and a put wall. The softest spot is 6965. So, based on that, that's a slower pace comment. It's not hectic like these bars on my screen. The valley of pressure, like the least amount of pressure, is 6965. So, I don't think we're going to leave that easily. We built up, people panicked and bought puts. So, we should have a floor below us. And we're already loaded up with calls because of the action from yesterday. So we are comfortable being here to burn both puts and calls. If I was a market maker, I would just loiter here for a couple of hours, burn people's cash. So buying calls and puts, you're going to be super fast. You'll be better served doing homework on some other trades. So for example, Datadog credit put spread. If you structured one, you want to share it with the group. Well, for now, Raul, I think we're range bound here inside this green box. I'm going to move it out of the way because it's visually intrusive. You were here yesterday, so you know how we came up with this box. Pamela, are you good with what I already said earlier? We're on the same page? Okay. Thank you. People on Twitter, I'm not reading your comments. So, people here, if you see comments that we need to work, let me know. So basically, that one trade pays for more than a month worth of subscription. If you did two contracts, you paid for the Discord too, and $50 to spend on a steak dinner tonight. Well, for yourself, not for two people. Crazy. Okay, so when I don't have a good idea, I just sit on the sideline. Like somebody says, I'm waiting for a better entry. Excellent. Excellent. This is a problem here for the S&P. Unless one of these spikes, this is a problem. The KRE, mark my words. So what did I say yesterday? I wonder if the market's going to have a red day because the KRE was red yesterday when the market was rallying. That sucker is an excellent rabbit to follow. Whether it's so far behind that it's actually a leading indicator or it's so far ahead, I don't care. That thing has not steered us wrong yet. And the drum roll on that one, it better not lose yesterday's though, because it might accelerate to the downside and that might put undue pressure because the financials are a significant box of the S&P. And tomorrow morning, so their chief reported today, JP Morgan reported a good quarter, solid. And the reaction was, yay, they spiked it, but they're at all-time highs. So they already have given them the benefit of the doubt. And this is what's going on in the options with JP Morgan right now. Give it a minute. It should pop up. There we go. So they're not planning on going back. And if they are, they'll be sellers at 325. That's for Friday's expiration. There's no zero DTEs with regular stocks. But if you look left, this nothing unusual. So the last short was sell a call spread, buy a put spread. It worked like 10 times. And the only time I lost money on JP Morgan is we were in an iron condor that was perfect. And then one day somebody sends out a headline during the crisis, the financial crisis 2 years ago in March. 2 people or 3 people went to jail. They were accused of cheating, but that was an old story and they rehashed it because the week was all about financials. The credit put spread got pierced. And if somebody closed it right away, they lost like $11. But if somebody didn't, they lost maximum loss on the credit put spread, which was $2 wide. It wasn't a big deal. Other than that, every trade worked. So just keep doing what you're doing. I was hoping it spikes so I can repeat this trade. Sell a call spread, buy a put spread, or just sell a call spread and not buy a put spread. Either way, they were easy trades, just pacing it. And if you booked the iron butterfly at the open, you had a huge win. And I insisted you book it. I said, if you want to mess around with managing the iron condor for the Friday, if you chose that, I guess you can. But even that one, in hindsight, was a bad decision. You're not losing money, but you had money and you left it on the table. So don't turn an overnight earnings trade into something complicated. Oops. While I was there, back at the farm, who this be then doing that? Okay, so these guys flash the low and they're holding. Look at that wick versus this. So that's an ETF of sort. Looks like the XLI. Finally, die, mo flicker, die. I'm short the XLI, can you tell? So Berkshire dropped. That's a heavyweight in the XLF. The XLF took a level lower. So that's probably what it is. Let's go into the XLF ETF. So this is the XLF in totality. Let me reset. These are 30-minute candles. So let's zoom in a little bit more, 5 minutes. So Berkshire dropped, and that's a heavyweight. The biggest part of the XLF is Berkshire. Visa is having a moment, MasterCard, but not this last minute. I'm trying to see who was, yeah, Berkshire. Okay, so we go here to see which one of these actually just fell. These are the ETFs. That's weird. So who was it? SMH? What am I missing? There's a flash dip in the pan. And I said they need to close that candle, and they just did. Boink. They overshot by about 10 cents more, 30 cents. Oh, they closed all of them. This wick closes all the candles. There's no need to come back down here. They closed all of them. I said they left a sliver, right? They just closed all of them. Look at this flash dip here. I love it how the market is well organized like that. And I know there wasn't a release of data because it's not a round number on the minutes. So now the job is do not make a lower low. So far, this day has been perfect from charting perspective, from options perspective. I told you 6965. We're not going to leave that area. So they tried to push higher. They couldn't go past it much. The special Iron Condor is a winner by $120. Don't stay in it. It's a very narrow range. I doubt it. We have so many hours until the end of the day. Stupid phone. Whoever designed the on-off button on the stupid Samsung Flip or whatever that's called, uh, Fold, they deserve to step on a Lego, like hard. It is painful. Done it many times. I do it now with the puppies' toys. It's like there's a toddler in the house. Like, when did it become that puppies need that many toys? Well, dogs need that many toys. They're not puppies. Heck of a bounce. Take this O out. You get to that 695 promised land. Pressure, call wall, 6980, start, 6985, stronger, no put wall, disappeared. So let me go find it somewhere else. The sweep spot is 6965. 6980, call wall, 85, stronger. 6960, I wouldn't call it a wall. 55, I wouldn't call it a wall. 50. 50 and 80. Maybe I should change the format on these. I have a mystery issue. I will draw your solicit help from you. Something changed last year. What address is the YouTube channel? Simple Stocks. So youtube.com/simple stocks. You want the address where I am right now live? I'm on Twitter as well. They would not let me have Simple Stocks over there, even though it was available. They just wouldn't let me. That was pretty weird. They made me put an underscore. Okay, don't hold calls past here with confidence. And if you do hold calls, scalp. I don't think the path higher is that easy yet. I mean, obviously, this is the market that can flip on a dime, but so far they've been well organized. So let's assume that they stay well organized. My top reds are fading. Watch your mouth. That's what you want to see. You're seeing what you want to see. No, I think it's still an even fight, Tom. Even if I just look at the options chain for today on the SPX, the put wall is at 69.40, consistent. It disappears and comes back, disappears, it comes back. And 69.80, they've been pretty consistent. And my calculation, which is slightly different, a little bit more organized, a little less cracky, 69.65 is the sweet spot. And I have $10 of upside and downside that is doable. Beyond $10, the pressure doubles. Beyond that, the pressure doubles the doubles or triples. So 69.65 iron butterfly still works. Update. Oh, yeah. Thanks for that. That is a mystery to me, given what other people have opinions on that. All right. So on YouTube and on Twitter, in case you hear me answering some stuff, I have messages here in the live room. We have 150 people or so. And so you don't know what I'm answering to them. And I'm having multiple conversations at the same time. Whenever it's important, I mention it. Like, for example, NVIDIA right now is bailing the market out. It's been sucking wind for a while. So it's time to try to do something constructive. Recovered the morning dip, and it's trying to do some upside, and it has plenty of upside opportunities. All they have to do is just take out 187 with force. Okay, that's NVIDIA. And Apple is mounting a comeback. Microsoft is also, and even Meta has stabilized, and we have Alphabet already up. So we have, read the morning note. Read the morning note. If there's rotation out of the Excel, this, that, and the other, the mega caps have been asleep, sideways, not weak, just sideways, relatively weak. They can take the baton. They can rotate into the mega caps, and we can have ourselves a green day. The day is barely red. It's not red on the Nasdaq. The Nasdaq is flat. The S&P is down 0.17%. And the small caps are not down. We are not down. It feels like we just had a correction because we had 2 hours of red ticks. That's it. So they bought the dip and they're going to try to make a higher high. And this dip is a dip non-dip. Yesterday's dip was a real dip. Today, there was no dip. We gapped up, we broke records, we fell from the records back to the baseline of yesterday, and we're trying to base another rip higher. So Tom bought the dip before it happened, but he hedged short term, so that was perfect. The trade was to get long on weakness, and he hedged it by being short on short term, so that was perfect. What wasn't perfect is a $3 spike in the IWM this morning. That they may live to regret that. If there is rotation into tech out of IWM, it's going to take a lot of efforts to take out that 264.15 on the IWM. So I'll keep an eye on that one. That was a big wall to put in 1 minute. So let's go about the S&P and see if we can have ourselves a swing trade opportunity. This bounce creates a tiny rising wedge, and it's going into some pretty pivotal moments. So believe it or not, once we hit that green box, it's going to be resistance again, because that one is almost a perfect fair value gap from today. You couldn't design it any more perfect. I'm not kidding you. It's from these candles, a fair value gap to the penny. Like, this is math. The odds of that happening is probably as high as getting 4 numbers right on the lotto. I can't believe it. It's as if you told me go draw fair value gaps, I will put one there. Exactly there. Not like a little bit higher, a little bit lower. Both edges are penny perfect. It's not Bravo for me. It's how organized is this market. It's unbelievable. So once we approach that little squiggly red yellow mark, I put that here today because it's a visual resistance level. Then the next resistance level is that green box. And now the red boxes are disappearing because now we have a bounce in the ETFs and NVIDIA. NVIDIA is 8% of the S&P. And just like that, we are green-ish. Mega Z. We'll go back to watching this one plus Tesla. The upper box is a visual presentation. This is target 1.5 of the mega caps rebound. We'll go back to 30 seconds so we can see shorter term. These are already 30 seconds. So the easy bounce has happened. If you had an iron condor from this morning, you're making $60 out of $100. So you have 60% of the total till already. This is already 14% return on the day. Let's say you did 10, you made $400. $600. Done. I would exit or trim it down and leave some runners. And we're not guaranteed a thing. If you took the other one, you're still up $130 per unit. And that's way bigger reward percentage-wise. I would take that out completely. I would not be in that one. The goal is to make money, not to make all the money. Okay? All right. If you bought calls earlier today, you're down 20%. Let's say you bought calls the first moment we had a dip and you didn't stop out, you should have. You're only down 20%. Can you freaking believe it? This market rewards you if you're a bad trader as long as you don't trade puts. Don't get used to it. Once this market normalizes, that behavior goes away. So you should acknowledge the fact that you should have stopped out earlier and you should stop out now. But that's on you. If you didn't stop out earlier. Anyway, don't buy a put. It's not easy to fall. Don't buy a call starting here. The easy money has been made. It can go higher. So if you're buying calls for tomorrow or the day after, that's on you. That's a different story. But for today, it's hard to fall. And it's equally as hard to rally 50 cents or down 50 cents. So we're in a sweet spot right now. 69.70, 69.65, 69.75, 69.55. That whole zone is where I think the market wants to be. So let's see if they break the rules and start going into a call wall. Yesterday, they did. And they had a small dip in the end to make it okay. They also profited from a lot of put buyers. So today, the call cluster is just above here. And the put cluster starts below here and extends all the way down. So if the bell rings right now, the market makers made a killing today. Killing. They crushed all the call buyers in the morning and reloaded their hope right now. And the put buyers didn't have time to enjoy their profits unless they scalped. There are 1,100 call transacting at 6,900 right now. That's a pile of cash down there too. So that's probably somebody stuck in a sold call, needing to roll out of it or something. Don't use that information as if it's like you found something. I think you'd be misleading yourself. Okay, let's go to Trade Ticks. We do a better job tracking the price action, but a lot of people pay them money. So the market, it represents what the market wants to see, right? Big trades there for 116 and 123. There is about $9 million worth of negative transactions at 690. Let's go check it out. How can I explain that? I don't have to, actually. Let me see if I can find out what it means, and then this way we'll call it a day. 690. I think it's a bought puts. So somebody panicked. loaded up on puts for the month. And the fact that it's the monthly, I don't think that's a scientific method. Somebody panicked and loaded up on puts for 2 weeks. The end of the month, not the end of the month, the monthly expiration. So that's the 16th, and 7 days later at 690. So what they probably did, ah, so although that doesn't make sense, they also transacted a lot of those puts. So people are buying puts at the 690 level for the 16th and the 23rd. If one of them was green, I would say they sold 2 puts for the 16th and bought one set. That would be smart. That would be shorting the market for free at 690. Don't do that. Anyway, algo flow is red, very red, and there's no divergence. Let's go to the gamma exposure that they produce. It's different than mine. Sometimes we agree, but not always. Okay, 696 is a huge, and I mean huge, level. 696. So going above that, forget about it. 695, 1/3. It's still big, but it's 1/3. 693, bigger than 95. So we're stuck between 93 and 95. So I agree with that, according to TradyTix on the SPY. On the SPX, the biggest magnet, it's 6960. I agree with that. The second biggest magnet is 6965. And then there's also pressure to go to 7080 zone, which is where we are. So I guess as long as you're above 6965, you can avoid going back to 6960. So we don't disagree. The focal point is where we are. The QQQ, 627, 626, big magnets. Downside pressure. But there's no walls until 630. So the Qs is up to the individuals there. Here we go. This is an area of resistance, just looking left. This was the gap. So we just got back to the to the report release. I'm not going to answer any any questions in YouTube. If you are a member trying to create an engagement, I appreciate it very much, but I'm not going to do that today. If they want to trade, they can join. We're showing them what we can do, which is pretty good things. So if you don't mind, thanks. First of all, those pressure tables that you see, these bars, nobody has that. This is live options data. This says don't hold a put. This is how it was yesterday, but it was a stick. So there was no resistance. Today they're trying to build some or hang on to some. And the levels are impeccable. So we just cleared yesterday's opening range. That was that yellow box that I just drew here. I'll change it to blue so we'd know. I hand drew these dotted blue lines. This was important yesterday, and we're bouncing off of it. And those help us trade 0 DTEs. It makes us near perfect with those. All right, gold bounced and gave it up. Silver bounced and did not give it up. So we have some sort of a divergence there between those two. NVIDIA just cleared 187. Let's see if it can hold it. That's a game changer. It's a heavyweight. The XLF just made a lower low, so there's no happy story there yet. They've been on a tear, so it's okay. The XLI is trying to avoid a target that I think should be imminent, much lower. And it would be okay because it too broke records. So all these dips are okay. Like Boeing is going to 247. That's crazy stuff. Like absolutely crazy stuff. I'm this close to going to the end of the year, selling calls on Boeing and walking away. Yes, they have a lot of sales news, but they can't produce these planes. So Unless they can magically materialize some planes to deliver, those sales will not hit the P&L, and there'll be disappointment when they actually report. Those sales just say we have a book of sales out decades, but that's the story for decades. So it's not a new headline, but the stock is going through the roof. Unless they're engaged in some new activity, like, I don't know, uh, generators for power or something, some turbine power to AI, blah, blah, blah. Ooh, then it'll be $600. If all they have to say, oh, we're going to get into this AI power generation business, maybe that's what it is, and compete with GE. Palantir, that's also something you want to keep an eye on to see if it can take out yesterday's high. It hasn't been able to maintain the bids like it used to. That, in contrast with the VIX that cannot catch a break. The VIX is broken. I am convinced 100%. The VIX is broken. There's going to be books about it. The calls we bought in the VIX for protection are only down 50 cents. And that's a win, because for you to take a quote bearish bet on the economy, on the stock market, I'm sorry, and for us to break records almost every day, literally today, and for you to only be down $50 in 3 weeks, how long ago? 34 days in a month. That's imagine if you just bought puts. Those puts would be zero by now. But the VIX calls, which is technically bearish markets, lost 50 cents. So 9%, 10%, something like that. Anyway, depends on your entry price, of course. Even if it's 15%, it's still a win. All right, let me check my spreadsheet for pressure. Heads up on YouTube and Twitter. We're going to be live probably for another 35 minutes or so, and then we're going to cut you off. Rude. The sweet spot, it's 69.65. It still is. So we are in pushing up against resistance, which extend through 7,000. 7,000, it's a mile long, the resistance, which is expected. It's a round number. So, for example, 6,980 is high pressure. So I wonder how they're going to handle that. Are we going to have another whoosh lower by somebody falling off a cliff or something? How are they going to deal with this? Okay, so earlier I said it was to the penny. I lied. 695.75 is so a sliver of this green box is not a fair value gap, but the bottom is to the penny anyway. So this green box should be resistance. So I would start a credit call spread here if I didn't have one. Which one? I would sell the 69.90 credit call spread and collect $80. If I wanted to trade right now, instead of buying a put, I would sell a call spread on this push higher. You can probably get $80 out of it. It's quoting 80. Expiration today, SPX. Please use. If you don't know how to trade these, don't do it. If you have PDT rules, don't do it. I don't want to say buy a put here. What the yellow circle? Explain. Which one? This one? No. These things? Okay, so that's a companion tool to the harmonics. I'm going to guess they're looking for reversal spots. So technically, they say you can trade those circles. So you can buy a put here, buy a call here. So kind of like my X's and O's. That's some sort of an internal mojo that they have. HSI dots. So harmonic strength index, I think they call it. So it's part of the invite only. I think it's this one right there. So if I go here, This one. Yep. So they give you the harmonics software that tells you go long, go short, but they tell you don't go long, don't go short unless you get 2 confirmations. That's one of them. For me, look left. This is the biggest red candle of the day. We can put a box around that if we want. Nick with the freaking boxes. Have they not made us money? Have they not offered us really good guidance? They have. Therefore, we will continue to use them. I think it's excellent information. Big red 113 candle. So if this was the biggest bear on the screen, why would I not frame it with a box? Yes, credit call spread, $80. That's what I would do right now. Well, now it's 68. You already made $12. You could buy a put and hope for the best. So a put is doable here, but you should know that if we drop from 695 towards 694.4, they're going to stop. They're going to find the floor. So you can buy a put here with tight stops. So the 695 put, no, the 696 put would be the one I would buy. It's $126. Wow. 1.28, 1.3. It just jumped. 1.31. Whatever it is. So I hold a put and I say buy to open, expiration today, $130. And I would take a dip from here to here and I would exit. Or if I make X percent, I would exit. Or if I lose X percent, I would exit. Now, if you've never done this, because the VIX is so low, it's a great way to learn on the fly. You're only risking $20, $30. What do I mean? Okay, so you buy to open for 130. If you're completely wrong, you close it for $30 less. You'd have lost, 25%. If you close it for 50% loss, so you practiced for $70. You're not breaking the bank. And the goal is not to make money, is to learn something. So if you bought it and you're green, don't close it because you need to experience the extremes. So I would experience, ooh, I'm winning, but if I don't book it and then it bounces against me, oh man, I let my winnings go. So now I'm going through the emotional gamut of a trader. The school, it's a cheap class. And then maybe you get paid at the end. And then it goes to green again. It's like, oh, yeah, this time I need to book it. Nope, I don't. And then it goes back and now it's red. Oh my gosh, that's how red feels. Oh my gosh, that's how really red feels. Or that's how really green feels. Or if I book it and then you see it go again for you and you go, oh my God, I left so much money on the table. Small price to pay to experience the highs and lows and sideways, disappointments and exhilaration of trying to create income from trading. Cheap. You can do it with the SPY because the VIX is low. In case you didn't know, the VIX is calculated from the prices of options in the S&P only. So it actually tells you, and not now, 28 days to 35 days out, so a month out. And so it literally tells you that the options gods, the market makers, those who are selling the options you want to buy, are pretty chill with this situation that they don't want to charge you a lot for the calls and the puts. Like they are so confident in the situation that they only want $100 for you to short the market. When the VIX goes to 20, that's 400. 21, even more. You've seen it. If you were here on crisis days when the VIX spikes, it's $300 to $400 to buy one call or a put. Okay, then I would tell you don't do this unless you know what you're doing. But for $130 ticket entry, totally doable for anybody to try it. Totally doable. I thought it will be red trend day, so I have SPX. So can you tell me credit call spread for today? It's not 180. 69.80. 69.80 is 180. Okay. Let me double check. When did you sell it? You chased it down with a credit spread. It's 160. So if I have that, I'm not exiting here. You chased down with a credit call spread. Maybe. But if you do have that 69.80, yes, you're under pressure, but statistically, you still have a slight advantage to the person that bought it from you. Yeah, you're down now, but if the bell rings, you make your money. Let me know you heard. So somebody sold a call spread and they're struggling with it because it's under pressure. I'll visualize it. 69.80 right here. Yes, that's dangerous. But if you waited this long, wait a few minutes. Time will fix you. Any dips, lighten up. You can roll one or two of them to tomorrow to kick the can. So let's do that for you. 261114. Harry, can you hear me? James, 1 second. Why am I not getting a value? What did I do wrong? 261. Oh, that's why. 260114. Harry, you can move it to 69.95 tomorrow and pay nothing. You might get a credit. So move one to make it manageable, or move all three, or move two. You can move it up inside today. You can sell an aggressive credit put spread and manage it. Depends on your time frame, but I know your schedule is wonky. So if you cannot babysit it, move it until tomorrow and sell a credit put spread for tomorrow, and we'll deal with it. Okay. Let me know whenever you need help later. Aplovin, what's your question, James? Sold the credit call spread. Oh, I could have saved you a lot of trouble. I could have saved you a lot of trouble. I've got bloody fingers from that sucker. Look at this P&L, man. This is like Nvidia P&L. Yes, it's expensive, but good lord, there are some easier shorts out there. Just trust me when I tell you, Deborah and I have bloodied our fingers in that stock last year. I wouldn't do that. I'm just letting you know that I tried that twice and lost. So be careful, okay? Please. The P&L is amazing. Cuidado. Achtung. Intibe. Attention. Yeah, proceed with caution. So, in fact, if you sold a lot, you might want to buy a shorter dated call as a sacrifice call. Let's say you created $1,000 in credits. Oh, one. Okay, never mind. Then we're good. Enjoy. Phew. All right, time for a beverage. I'm on mute. Jeeves, release the drone. Okay. So they're paying you on that put. It's up 23%. That's about $25. So this is where we talked about learning how to trade. Okay, so you took a put. It went slightly red. Nothing outrageous. It's going your way. Oh, I'm happy. Let it ride. If it bounces against you and you lose the greens, now you've experienced another emotion. Like, gosh dang it, I shoulda, coulda, woulda, but didn't. You have to overcome these. Because if they bounce here and they get back into like the word candle in that big red box, they will go to 696. But I already told you, I see pressure in the options chain. I can read the options chains pretty well. You guys have seen the results of that. Like yesterday, the Delta Airlines and the JP Morgan bets. This morning, the Iron Butterfly, the Iron Condor. If you did an Iron Butterfly, that would have been good. So there are laws of physics that work most of the times. Well, if you need a win today, I would scalp it. It's not going to be easy to finish the arrow, and it's definitely not going to be easy to break through the arrow. 20% is a legit win, yes. Especially if you use the SPX. Baby steps, right? Let me check on a few things, okay? On a somewhat slow pace, like a 30-minute chart, today's dip hits target 1.5. So that's a lot of dips. Even though the score is not red, that's a lot of negative action. Okay, 200 better than nothing. So if you did book the SPY put, generally speaking, I'm not speaking to someone in particular, you just learned how to take a trade. We said the 696 put, and it paid you $25, roughly 25%. It wasn't. It was 27%, $25, something like that. But it was something per contract. And then you scale. Once you establish the process over a period of time, up days, down days, sideways days, you say, okay, I can do it in all kinds of markets. So then you scale. That 25 turns into 2 of them, 50, 10 of them, 250. Scale. And like I always say, you'll start with 1, you go, I'm going to double it. You go to 2, I'm going to double it. You go to 4, and you start scaling, and then you hit a number and you start messing up because that plays with your psyche. We all have our limits. Like I always go back to racing. You know, you can take a turn, a 90-degree turn at slow speeds, no problem. You turn in, you go into the apex, you turn out, no problem, all organized. You dial up the speed a little bit, you start to mess up. You either turn in a little too late, a little too soon, you apex a little too late, a little too soon, and you suffer exit speeds. And then you keep on adding to, but still okay. You add, and suddenly you hit a speed, you're like, holy crap, you spin out. Which wall do you hit if you spin out? Let's see if any of you know racing. With like a new racer, if they're taking a high speed turn, let's say to the right, and it's not quite 90 degrees, which wall do they tend to hit more? The outside wall or the inside wall? The call wall. There we go. Boom, dish. Inside wall. The car loses the fishtails. You lose the back end, and you head to the inside wall. For me, it is. And look at the upper right hand corner. The mega caps are going to have a little dip, and that's what's going to make it happen. Call wall is, I don't know if about a wall. Let me describe it. The sweet spot is 6965. Okay. $5 above and below is a good gentle spot. $5 outside of that also. So 6965, $10 above and below is comfortable. So 80 and above, it starts to getting wally. The hugest wall is at 7,000 and it's massive. It's skewing the whole thing. In fact, I have to delete it to get any details. Otherwise, the whole scale is big. So yeah, 6965, it gets wonky at 80 or higher. It gets wonky at 50 or lower. So 6950 to 80 is a comfortable spot to sell calls and puts if you know what you're doing. Please don't sell calls and puts in the market naked. And okay, so we got our arrow. Nothing below here should be easy at all. How about this for direction? Holy crap. People on YouTube, how much more evidence do you need to get your asses in this room? You saw it. Arrows, comments, levels, iron condors, iron butterflies. Fun. The group is hilarious. Except for no, they're all hilarious. Well, some are lamer jokes than other. What more do you need to believe that the freaking $90 a month you pay is paid for by this one put? That's $82, $86 of profit from this one put. Not like credit call spread or credit put, just one put. $85. Anyway, you don't want to be here, we don't want you here anyway. Bye. It's that easy every day. Some days it's not that easy, but most days. Like yesterday, we did not get a good grip on a credit put spread. It just wasn't available, even though it was a perfect day for a credit put spread if you did it in the morning. HHA? I don't know what that is. So we about an hour ago, we left yesterday's opening range. That blue, ugly hand-drawn box, that's yesterday's 1.5 hours of trading is below here. Nothing below here should be easy. The only reason we go below here is because the bulls are dead tired, and they should be. We are at all-time highs. I think I know this song. Those are good artists. So I think we need a channel on YouTube or Instagram, nothing to do with trading, by the way, that Tom would know this. Tom, when did they introduce auto-tune? 80s, 87, 9, 88, 91? When did auto-tune come? Hey, Google, when did they invent auto-tune? 97. 97. So I think we need to audit all, quote, artists post 97. Isolate their audios to see, because we compare them to these geniuses that came before them that sound amazing, even in the studio or live, no auto tune. We need to tour up all these artists that are up now without auto tune and see how many survive. Yeah, I'm jacked up. Can you tell? So on the way up, if we get to 694.50 and 694.75, those are important lines. Short term, very short term. Good information, Eric. I think I know the song too. Milli Vanilli did not use auto tune, they just used a different person. Sad story there. Didn't one of them pass anyway? Um, so the bearish. So if we go up to this area, there should be small sellers, and this area as well. Yeah, they were. So bounces. If you bought a call, you exit on those two. If you want to buy a put, I don't think you should. Let me check. 6.9. You can get 40 cents of downside, maybe, but I'm not too excited about it. So if they fail to leave to bounce beyond that blue line, they might do this one more time. I wouldn't buy puts for it though. This is a very bullish market, and look at the bounce here. One of these ETFs is soaring. So the XLP, that's a defensive bunch. The XLB materials, I would love to investigate that sector one day. I keep saying that. So the F is under pressure. The V is always a wild card, and it's in the middle of this wild card. Look at these guys: Lilly, Pfizer, Merck, Humana, UNH. XLI has been on freaking fire. So much froth in that stock. I mean, I love Caterpillar's fundamentals, but golly, hello, these guys, the KRE, okay, but that is a terrible shape. So this one warned us yesterday that we might have a red day, but we did have red ticks. The XLP, the defensives are too strong for me to be comfortable. Okay. You could start puts here, but I wouldn't put my money on it. I would rather sell a call spread again. They will not pay you $90 this time. It's only $40. No, wait, $50. So if you sold the credit call spread instead of buying the put here on that arrow, you made $50 out of thin air. You made a little bit more by buying the put, but you needed perfection to make more. The credit call spread would have paid you anyway, whether they fell or not. The put, you needed the drop in order to make money. I told you if you catch a put, and like I know someone exited here and they were saying, oh man, I could have made another 100, but you made 200. So we're not here to be perfect. We're just here to not make major mistakes and make consistent 25 to 50% runs intraday. We're here to make 12 to 20% in passive income in credit spreads, hopefully per day or 2-3 times a week. So base hits will win the race. So for example, 2025 was the most bullish year I've ever seen in my life. The stuff that happened inside of it. The most outrageous year I've seen, including the pandemic. And it eked out a 15% reward. All this bullishness. Everything. The Fed, Med, everything. And So, by the way, if you're reloaded on puts, you only have 40 cents of easy downside based on this. 6965, they're going to start buying. Okay. So that's 50 cents. If we crack below the letter X, that's something else. But this is what they're trying to do. This blue thing I just drew. What was I talking about? Okay, so to tell you the level of returns that you just did here, how impressive that is, even if you just make a fraction of what we just did here every day. So the whole year was 15%. You just made more than that in one day. If you avoid disasters in the week, like if you have good stopping power, which means you have losses, but you contain the losses. You don't need to let the winners run, unlike some other momentum traders. These are not momentum trades. These are surgical entries and exits based on data. There's no emotions, no nothing. I read the data, I look at the patterns, estimate the moves, and we take a trade. There's no guessing here. It's science. Anyway, if you do that and you stop the losses to being from max losses, you're going to crush the returns of anybody. And you don't care if the market is up, down, or sideways. This is what it means to be a professional trader without having to trade the futures. But if you trade the futures, it's even better. Same concept applies. It's just how you trade it. I'm not promising anything. We're delivering it. Now, the tricky part is when you take trades overnight and then stuff happens. So when a stock falls into oblivion, I have no problem selling puts to own shares if I like the company. These days, I caution we're at all-time highs. I always say start with a credit put spread with the intention of turning into a sold put. This way you go long, and if your timing is less than perfect or if we get surprised by a headline here and there. The reports, the earnings reports are fantastic. So this is not a bubble like the olden days, not from the typical bubble term. It is a bubble of hope. Like AI is a bubble, but not AI. The expectations of stock prices that are tied to AI is the bubble, like in the .com. The .com wasn't the bubble. It was a no-brainer. Websites were the way to go. It's a fact. We live it now. It brought us the internet. The .com wasn't the bubble. The hope of the .com stocks that were tied that day was the bubble. So we have this similar situation now. So what I'm saying is use logic. Like selling a put works, but at all-time highs, start with a credit put spread. I want to take ALAB swing long shares. Daily chart, inverse head and shoulders. Sort of triggered. All right, Harry. I love these questions. So anybody watching, anybody in here, please watch Harry's questions. Like dream teammate comes to you with a clear question in the I want to take ALAB. Let's cut it and go to ALAB. Swing long shares, daily inverse head and shoulders. Okay, I see what you mean. It's not an inverse head and shoulders. And I'll address you this. For me, so this is a concept I will teach in the seminar at the end of the month. And a pattern is not a trade idea. The trade idea should be you want to go long for another reason. The pattern just tells you how far you might make, how far you might go. It's not a trade idea. So let me address it. They triggered on the neckline on January 5th. Neckline on January 5th. So this one here. Okay. But failed. And now they're attempting again. Excellent. All right. So you bring up a good point. So why didn't you buy it 2 days ago? That's my initial reaction. Like you missed out on How much is that? 3% of upside? Oh, 13% of upside. Way off. That's my initial reaction. You're buying long into a prior fail. You just said it. They failed here 7 days ago. What makes you think this time is going to be different? Can I take an entry here long with a stop below 150? So I love the fact that you have a stop. 150, that's a pretty big stop. That's up to you. So how about this? How many shares were you going to buy? Don't answer. More than 100 or under 100? What is that 150 number? 150 shares? Okay. So, oopsies. Okay, so somebody's going to say news, news. And I'm going to say, oh, okay, so how did I know that this would happen, right? News. No, it's not news. It's price action. News just makes it happen faster. So how about this? Sell a put and buy a call spread, or sell a put spread and buy a call spread. Sell a put spread to expire before the earnings, buy a call spread to go longer than the earnings in that stock. So you would be long with no money out of pocket. Or buy your shares and sell an aggressive covered call. Because you have a measured move, right? You mentioned inverse head and shoulders, so you know what's the upside. Okay, I'll go and explain. Okay, so I don't like that you're chasing into a prior fail. I want it disclosed right off the bat, right? You see here how we went long on the way down. By the way, this one almost priced in the whole thing. You're going into a massive, massive pivot zone. You're measuring an inverse head and shoulders, which I argue with, to be up here. It's not going to be easy. All this is in the way, but it is technically not wrong. So I argue that the breakout was at 171, not where you see it. Okay. So this works better for you, that it's at 171. So if I wanted to chase long, I sell a credit. You're willing to buy shares here. So sell puts or put spreads below. They expire before the earnings. The earnings are early February. So sell it for the end of the month. And you sell credit put spread or you sell puts to own shares, whichever. You collect cash. Use the cash to buy a call spread that expires after the earnings. So you buy a call at the money and you sell a call. Now you can do a vertical call spread, or you can do it. You buy the call here out in time with the money you got from here, and you sell a call shorter dated, diagonal. Debit call spread. You buy the call. You want to go long the stock. You sell a call higher. So you buy this call. You sell this call. You pay. If this goes up, you double your money. But it's more than this because you collected money here to get long. So you can be long with zero out of pocket. And any money you recover from selling that call or the call spread is pure profit. This is a lab. I don't like going long into a prior fail, but that's the question came. I want to buy shares. What do you think? I would rather not buy shares. I would rather buy synthetic shares. Selling a put, buying a call is synthetic shares. Let me see if I can give you exact numbers. And you can actually turn this one into shares. Like if you buy a call spread, the call you buy gives you the right to turn it into actual shares. So if you like the trade and it's developing well, you say, give me my shares. So the call disappears. right? And then you already have a sold call. I mean, that's up to you to hedge your bet. A-Lab. So if you go to January 30th, for example, Harry, if you sell a 160 put, they'll pay you more than $400. That's a long seller put buy call. Pamela on A-Lab, yeah, I'm working with it. So they will pay you more than $400 to say you will buy shares at 160 between now and January 30th. So you will be on the hook to own shares at 160. You were going to buy them now, right? If you're going to buy them now, why wouldn't you buy them at 160? So you sell the 160 put. This is not a trade idea for anybody else but him. Minus 160 put. $430 cash. You use that 430 to buy a call or a call spread. A debit call spread that is $10 wide should cost you about $430. So if you sell a put, buy a call, and the stock goes past your call spread, you're right, and it goes, then you sell it for 800, whatever it is, and you quote double your money, but you don't double your money. You can't calculate how much you made because you don't have a cost. You collected $400 here. As long as the stock doesn't fall through your put, any money you recover from selling this, even if you sell it for $200, it's profit because you collected 400 and then you collected 200, even though that 200 is a loss. You collected 600 from both and you made money. You made $600 out of thin air. Now, the risk is if the stock drops and they assign you shares at 160, now you're on the hook at 160, but you were going to buy them here at 182. Tell me you understand. The concept is I want to buy shares. Instead of buying the shares, I sell a put, which means I buy the shares lower. I buy a call, which means I have the right to own the shares here. So now you've accomplished your goal. You're long here, and you have no cash out of pocket, and your commitment doesn't start until 20% lower or so. Stock alternative strategy. Okay, people on YouTube, bye. Thanks for being here. Join the group. You saw what we do. How much money did we make today while you were watching? This is not a taped show. This is live. And I am always this nice. I'm always nice. No, I'm not. Most times. Neve, get into the live room. Edward, live room. Jose. Thanks for the support over there. All right, we're going to shut this down. End broadcast in 5, 4, 3, 2, 1. Goodbye.